Welcome everybody to the Q1 report results. My name is Schuil. I'm co-founder CEO of Safello. Here joined by Johan.
Hi, Johan Edin, CFO.
Let's get the presentation here for everyone to join in. If you have any questions, please leave it in the comments and we'll get to it. So here we go. So these are the key events for the first quarter. The biggest one is the LOI that we signed with Avanza. Avanza, for who don't know, Avanza is a bank that has more than 1.7 million users, a trading platform in stocks, equities, and all kinds of other trading capabilities. And we have signed an LOI to explore serving them with a crypto as a service offering, which is also the announcement that we make for our new offering that we're looking to target financial institutions with. And we are seeing an increased demand off the back of this LOI, which has been great. And we hope to announce more news in the coming period. Then we launched the integration with Diffly, a tax solution. So for our user base, which is predominantly Swedish, or entirely Swedish, I must say, now 268,000 users. We wanted to make it easy and convenient to declare their taxes just before tax season, which was just in May. And we managed to integrate with Diffly. Sorry, somebody has
Frank, I think we can't see your screen.
Okay.
Oh, there we go.
There we go. Yeah, I thought I had it. There we go. Can you see it now? Please confirm.
Yes.
All right. But everybody could hear me, I presume. Yes? You guys can hear me?
We can hear you, Frank.
Okay, all right. So we've done an integration with Diffly, that's diff.ly. You can find it on our website, safello.com, and we have a section now that we added on taxation. Diffly is deeply integrated, so it's very convenient. We also have an affiliate partnership with Coinly, another crypto tax solution. And it's really, Diffly was a great example of how third parties can integrate against our APIs to be able to have a distribution to our user base. So on the one hand, the crypto as a service offering is a great way to distribute our capabilities, which includes custody, crypto trading capabilities, and so on, to financial institutions and other partners via our API platform. On the other hand, this is an example where there's an integration where we allow third parties to connect to our distribution of users that we have. So it's a bi-directional setup, which is interesting. And the third key thing that we did, we changed the fee structure. Actually to have it a volume-based standardization across the board, moving away from kind of custom pricing. And this actually increased our gross margin, if I'm not mistaken. That's Johan Edin can comment on. And then if we look at the growth, Johan, sorry.
Just sorry to interrupt again, but could you share it without the full screen mode? We think that's better.
Okay, sure. All right. Sorry. It's not working. Yeah. So I'll go to the next slide then. Hopefully everybody can see that. Apologies for the technical difficulties. It seems to be rampant today. It wasn't the ITV had the same issue. Anyway, we did grow our user base by 7%. We saw an increase in the order amount, and we saw an increase of volume by 13%. And when in doubt, and it goes for the crypto market as well, zoom out, we can see that we've been on a steady growth trajectory since we repositioned ourselves in 2018, and we really found the product market fit. So looking at the relative growth to last year, we still saw an increase, whereas Q1 last year was definitely a hot market. So overall, I think a great quarter still for us, considering the market conditions, also considering that we've been pushing the envelope not only on our own product offering with our applications and being the market leader there, but also pushing ahead with a completely new product offering with crypto as a service that is in development. With that, I think it's worth spending a couple of minutes on the market sentiment, where I can share a little bit the market. Let me have a quick one here. Just over from the market picture to comment on first the overall market. So if we're looking at the market today, it's $1.3 trillion market cap of all cryptocurrencies combined, which here called market cap is over 19,000 different cryptocurrencies that they are tracking. And we then look at Bitcoin, and we saw obviously this crash that recently happened on the back of the UST news. So for those who have been following news, it's a cryptocurrency called Luna, and they created a stable coin that uses Luna, the cryptocurrency, underlying cryptocurrency, as a peg. Financial parties took advantage of that. It was an algorithmic stable coin, as it's called, and they poked holes in it, and as a result, there was a complete collapse of the USD, US Terra stable coin, and as a result, also the Terra cryptocurrency went basically to zero because it started printing new cryptocurrency. Now, to put that in historical perspective, we've seen these type of events before, and I mentioned it earlier this morning on the ITV, that we've seen similar kind of collapses with, for instance, MTGOX in 2014 when the platform broke down and 80% of the volume in the market kind of had to move elsewhere. And what we saw in that case was that the infrastructure hardened across the industry. In the same case, same is essentially true here. Algorithmic stable coins will probably either have to reimagine how they work because it was also affecting Algorand, and for cryptocurrency, the other stable coins that have actual dollar backing, they were able to prove themselves to continue to maintain the peg, as was the case with USDC, which is a cryptocurrency stable coin backed by Circle, the US based cryptocurrency company. So looking at the wider effect of the market, you know, the classic story of when in doubt, zoom out still applies to Bitcoin. So we're still above the peak of 2017 was around, well, it's not clearly visible here, it was about $20,000. There's obviously no certainty that we will find our way up already. But I think the biggest scare, if I look at the sentiment of the market, has been sort of taken into account now with this collapse of Terra Luna, and we'll be seeing what's happening this year. If you look historically, prolonged bear markets can be the case, and that's where obviously people are building new products. In our case, I think it only supports our effort to focus on our crypto as a service model, which is a SaaS business, more than being entirely reliant on volatility, which obviously could go down in a bear market as well. So with that said, I think I would like to hand it over to Johan for the second part of the presentation. And I think we have plenty of questions that we hopefully can get into as well. I will share my screen in the same way that I did before. One second. There we go. Johan, over to you.
Thank you, Frank. So just a quick comments on the numbers. In the first quarter, we saw around 65,000 orders, just shy, which I think is good and largely in line with where we were in Q4. Registrations continued to tick up, so total registered users is now 268,000. The volume somewhat lower than Q4, but that's also expected given the turmoil in the markets during the first quarter, and that has continued in the second quarter as well. So all in all, I think it's a good quarter. Looking at our cumulative turnover since start, we're now at close to 1.8 billion, 1.789 million. So I'd say it was a healthy quarter. If we take the next slide, there's just some highlights on, if you can share.
Yeah, doing my best. I was moving the hideaway. Yeah, there we go.
But turnover was up 5% compared to the very strong first quarter we had last year, to 205 million Swedish. The gross profit declined by 19% to 8.5 million. That should be seen in the light of lower margins. We've increased our fees back in Q4 last year, and we also adjusted the fee levels during Q1 to a level-based fee structure that we mentioned before. We think this works well, and it's basically a merit-based system. Operating profit before depreciation and amortization was a negative 3.1 million. We have increased our employee base, so it's mainly driven by costs for staffing up and ramping up ahead of a SaaS model. And we've seen external costs, so lawyers, etc., go down quite significantly, and we hope to maintain costs at reasonable levels, particularly external costs. Operating profit, or EBIT, was a negative 4 million compared to a profit of 800,000 last year. Again, impacted by the same things as I mentioned for the EBITDA. I do think we have a healthy cash balance. We saw a negative cash flow in the quarter of 3.7 million. So we still have 28 million in cash, and in addition, we hold 10 million as a long-term investment in crypto. Obviously, with the recent weeks' events, we've seen that decrease a bit, but it's still held at cost in the balance sheet, and we need to look at that as we conclude the second quarter, where the markets are. In addition, we also hold some liquidity at liquidity providers, so I will show that in the next slide. But in all, I'd say we are focused on building our crypto as a service offering, and we see that as an opportunity for 2022 and going forward. So again, to reiterate, our primary focus remains to retain our position in the Swedish market and capture the crypto as a service opportunity at an accelerated pace going forward. We take the next slides. So here you see the quarterly cash balance. So including the cash held at exchanges, that's around 31 million plus the 10 million we have in crypto. So I'd say we still have a good balance there. If we take the next slide, Frank. Not too much to comment on apart from what's already been said. Again, personnel expenses have increased, but we've also reached a level where we have, I'd say, critical mass in most functions, and we have substantially improved our development capacity. So we feel that's good, and we're also preparing the organization for increased volumes in all areas. So yeah, I think we can take the next slide. Here I already mentioned the cash and bank balances, and of course, as long as we have a cost base for employees that is high, but we also see that this opportunity going forward is important and a way to grow the business. So that's why it looks as it looks. Next slide, cash flow. I think I already mentioned the cash flow for the period, 3.7 million negative. So it is what it is, and yeah, we're looking forward to rolling out our crypto as a service offering. You can take the next. And that concludes the presentation.
Right. All right, cool. Yes, so I think with that we can go to some questions. So, Mark, could you talk a little bit about your long-term ambition with the crypto as a service concept? Where do you see competition come from, and how are you going to onboard your more financial institutions? Yeah, so that's a great question. So, starting with our long-term ambition, we really see. So maybe I can find this slide, another slide on this, because we've had. Let me quickly see if I can find it here. Yes, let me try to share this particular slide with you, because I think it gives a good view on how we view this opportunity and what dimensions this sits under. So I hope I can see it in full screen. Can you see the full screen slide now?
Not yet.
How about now?
No.
All right, so sorry about that. I'll hide the view.
There we go, I guess.
Yeah, fine. So I think when we're looking at the crypto as a service offering, it's good to understand that there are infrastructure players in the market today, and some of them are obviously been around for a longer time, and they have, if you look at, for instance, Paxos internationally, they partnered up with PayPal, and they've done some interesting integrations. And there are other platforms out there that provide just the technology infrastructure for financial institutions. Now, what is different about how we're positioning it is that we're actually looking at de-risking the crypto entry for the end customer, in this case a financial institution, which doesn't go only in the technology part, which obviously we have the custody, liquidity, payment methods, and the trading capabilities, but it's also around the governance model, the risk management, really taking all the parts of the operating of the cryptocurrency business without having to require your own registration, your own support teams on understanding sort of the crypto forensic on the compliance side, all those capabilities that certainly don't exist within most financial institutions that we're engaging with, that we can take care of. And the way we're looking at this model, obviously, in the best case scenario, we have deep integration across all these functionalities with, let's say, a bank, let's say an Avanza. But there's also the opportunity to take part of these capabilities and package them up separately to be able to offer that to whatever this financial institution might need, which in certain cases might be custody, in other cases might be trading functionality, and a third might actually only want to be interested in understanding the compliance part. So there are different ways of packaging this up. But it's really helping these, over 6,000 banks, and it's not exclusive to financial institutions. That's just where we see this urgent need for them to get into this market, and where we see the biggest need so far. But it's not limited to financial institutions. But under the MiCA regulations, if you just talk about Europe alone, there's more than 6,000 banks, and that is just banks. If you're talking about wealth managers, other types of financial institutions, that segment becomes much larger. But when we look at API capabilities and look at Safello Business, obviously we see already now a lot of interest from the gaming sector, being able to have safe custody for NFTs and things like that. So we see a broader solution for what we're creating here. And I think the competition is very much about the real ability to completely de-risk it as a third-party organization that partners with us, so they don't need to have their own capabilities in-house. Which that's exactly why we've come as far as we have with the discussions we have today. So I just wanted to share that slide, and then I'll go back. There we go. Hopefully that answers your question. More questions? Yes. Next one. Do you plan on hiring more FTEs for this specifically, or are you well staffed enough, even if, for example, the Avanza part comes into fusion? I think Johan, if I can take that answer question, I think Johan answered it. We already staffed up to be able to have the capabilities. I think some operational hiring might be connected to commercial agreements that we sign with third parties. But the way we built the platform is obviously that a lot of it is automated. And a lot of the sort of development work we've already staffed up for to be able to develop it. So the API infrastructure for this potential partnership will also be serving the Safello apps that we have today, to put that kind of in perspective on how we're building the infrastructure on the back of this. Johan, anything to add from your perspective, or?
No, I think you summed it up well, Frank. No immediate adjustments, and again, we have critical mass in most functions, I would say.
What is your take on your current fee structure and the balance between keeping a relatively good rate for your own profitability's sake and lower it to potentially drive more volume? Jo, you want to take this?
Sure, Frank. Well, I'd say we're quite happy with the fee structure that we currently have. It provides us, it's sort of related to the volume that we see, right? If we were to substantially lower fees, we may or may not see increased volumes. So I think it's a balance, and we're quite happy with the model we have right now. But of course, that may change, and we monitor the market and try to stay competitive. I think that's roughly what we can say.
I can add some historical context to that. So if you look at the price elasticity between the brokerage model, which is what we have, versus, for instance, an order book exchange, then certainly with an order book exchange, it really quickly goes to zero. And as kind of the tipping point is there, I guess, below like kind of 1% where the behavior starts changing, but it also requires then real-time capability in the order book. So for the brokerage model, and historically we've tested that. Well, of course, the market has changed, the market continually changed, but it's not as price sensitive as one would expect. As been demonstrated by some of our competitors that have been charging ridiculous sums and have not been out of business yet. So there is certainly price pressure, and I think that will continue. And as the adoption of financial institutions happened, it is obviously going to be more price pressure, and it depends also, of course, on the functionality. But the way we can look at that model is that the brokerage model would effectively become a deposit withdrawal type of function, where you have then the trading volume moving potentially to an order book type of platform, or at least that capabilities where you could experiment with different pricing models. But for us, the long-term view is, of course, that we have high confidence in our crypto as a service offering, where Safello effectively can focus on becoming a SaaS business. Hopefully I didn't say too much, Johan, but you can push back if you think I said anything that is not correct. Anything to add, Johan? Or fair enough? Fair enough. All right. Let's move to the next question then. Mark is on a roll today. How do you view long-term price pressure, the gross margin move? I guess it's quite similar discussion. Johan, do you want to comment on that?
No, I mean, it's quite natural. We've lowered the highest fees, and we've made it a more egalitarian pricing model, if you like. So yeah, we'll see. If we get bigger clients and more active clients, then obviously the margins would move down. Or if we adjust the overall levels in the coming year.
Yeah, and it's also looking at lifetime value of a customer, where I think the lifetime value is actually quite long relationship that we have with the customer, that sometimes leave in a bear market, but they come back in a bull market to either buy or sell, and it can be years in between. Separately, I mean, we of course always look at extending the lifetime value of the customer, not only on the current trading fee and the volatility as discussed before, but also in other business models that we still have on the roadmap on our end to look at. For instance, staking and things like interest-based business models can remove the reliability on just the volatility, which is still the primary income stream today. Next question. How much time do you save making the fee structure automated? And are there other tasks that you aim to automate going forward that gives fellow cost savings? That's a good question. This particular fee structure automation helped, I think, a significant amount with from an FTE perspective on the pricing and the customized pricing that we had in the organization. Other tests that you want to automate? Yeah, I mean, we're constantly looking at automation, and particularly Safello Business, we think we can improve quite a bit, and we're looking into that more deeply as we speak to see how we can enhance the automation around that product. Where I think also the onboarding then for corporations, hopefully the timeline with that could be significantly reduced, at which point the profitability of a single business customer goes up significantly as well. Johan, any other thoughts on this question? I think it's a good question. But
no, we are clearly working on it, and I think it could improve the user experience as well, particularly for corporates. So I think you've given a good answer, Frank.
Okay. Next one, Mark. He's definitely on a roll. Could you briefly touch on how the frosty crypto market has affected your customers' behavior in Q1 and perhaps in April, beginning of May? I'll pass this on to Johan as well.
Well, thank you. I think it's illustrated by the volumes that we've seen. And if you look internationally as well, I think Coinbase was down quite significantly in Q1 in terms of volumes, whereas we've actually almost managed or maintained it versus Q1 last year and almost staying at Q4 levels. And that's for the first quarter. Of course, I'd say in general terms, we haven't seen any major shift in the recent past. However, if this crypto turmoil continues, it may, of course, affect volumes, but I wouldn't say we've seen anything dramatic so far.
No, I think historically we do see summer months, and I think we disclosed that in our prospectus that there is some seasonality to the volume. So summer, June, July can be significantly less. At the same time, we've seen the opposite as well. So especially when there's a bear sentiment prior to summer, it could be the other way around. So it's really hard to put a finger kind of on what the short-term kind of volume is looking like. But I think I think the first quarter at least shows that it's not a complete collapse of the market or anything like that, if that's kind of behind your question. And we obviously see similar, like the growth number, we went from 250,000 users, 268,000 users, if I'm not mistaken, in the last reported number, Johan. Yeah. Okay. Next one. How do you decide on which new cryptocurrencies to offer on your platform going forward, and how do you avoid blowups such as Luna? So I think that's a very fair question. So we've always stated that we have a framework by which we assess the suitability for cryptocurrency and add them to our platform or not. To be clear, Luna is not a supported cryptocurrency by Safello. This we look at from different dimensions. So first off, we have kind of a framework that we communicated to the regulator on what the type of cryptocurrencies and which ones we are looking to offer. And then another dimension is like our partners and that we work with in order to be able to integrate it effectively. And then there's the third dimension of the assessment, which really goes into what is the suitability in terms of market size, which in this case, Luna would have cleared because I think the market cap was about 60 billion. But then you need to of course, monitor what kind of things are happening with the cryptocurrency, how mature is it, what kind of issues that might arise. The reality is that cryptocurrency market is still, some of the newer cryptocurrencies, there's a huge customer demand for it, are sometimes in their earlier stages of their life cycle, which means that there can be issues. There's always that chance. In Luna's case, when they created US Tether, US Terra, sorry, it was clear that it was a big financial experiment. So for those who've been following the crypto market, it was a very bold move by its founder, Do Kwon, to create this. And of course, there have been stable coins like Algorand that seemingly were performing fine. But I think the way this was structured did see some red flags in the market that, there was a coordinated effort to take advantage of that. I mean, it was a multi-billion kind of effort to do to UST what happened to UST and Luna. So I think it really is about that framework that we follow. And I mean, this is a great reminder that's why we have that framework and why we need to stay vigilant to protect our customers to best of our ability. At the end of the day, of course, the customers, we always encourage them to do their own research. That's what we say first and foremost, and really try to understand what they invest in. So yeah, I hope that provides some clarification. That was it? Were those all the questions? Yeah. Okay. All right. Any more questions? I'm looking. No, I don't think so. Yo, any parting thoughts? Well, then we look forward to, let's see, in another chat. No more. Okay. Well, then thanks everybody for tuning in. And for Mark, particularly for your great questions. You're winning it today. Yeah, no, thank you. And we look forward to seeing you for the next quarterly update. Thanks, everybody.
Thank you.